Wednesday, June 10th, 06:13 a.m. New York time. Welcome back, investors, to Winning Wall Street's Money. We're in the middle of the week. We have a big event, binary event, meaning a scheduled event known about for a long time, coming into this month. That's going to occur next Wednesday at 2 p.m. The FOMC. Do you know what that is? Do you know what that stands for? I noticed several people that work in financial institutions directly with banking for the longest time. I just found out recently they didn't know what that means. It means Federal Open Market Committee. It's part of the Federal Reserve. Some people don't know Federal Reserve is a central bank for the United States. There's a lot of people in high positions, very well educated academically, that may still not know their left from their right. Why would you take advice from them without doing your solid research? Well, I'm going to show you some charts that I believe, I feel strongly, I do solid research. Charts. Give you some other insight. The Federal Reserve is a committee. They have some mandates, but the committee, not one person, votes. There are some people now in government that have worked in the private sector wants to eliminate the Federal Reserve and give the power to one individual. I certainly don't support that as the rule of democracy, but there's people that do. This is a line chart, 3 grids, the far right, 1 year weekly, the middle 6-month daily, and the left intraday, 4 hours. It's the yields on the 2-year U.S. Treasury. Again, these are key words many in the media don't use. Creates a lot of misinformation and confusion to the public, and the public repeats that garbage, adding more misinformation, confusion, because they're not doing their due diligence of checking and verifying. So the 2-year yield is a short term. There's long term and short term. So this is a short term. The short term yield, the policies, words, actions of the Federal Reserve are very much reflected in the short term yields compared to the long term. The long term are the ones that are 10 years, 20 years, 30 years. So when the yields go down, that reflects interest rates going down or sentiment going down or a combination of both. Also, short-term yields affect the currency, the US dollar. When the short-term yields go higher, the US dollar reacts more to those quickly than the long term. So the weekly chart, far right, it's trending up right now. The middle chart, the daily, it's curving down. And the chart intraday on the far left, beginning of this week, it's curving down. Let's go on to the next. Oops, make sure, stay in order. Yep. So now we're looking at the longer term yield, the 10-year. The 10-year reflects the broader markets, the economy, the stock market. So when the longer term rates go higher, that's more fears of recession and other things leading up to the recession. Well, look at the far right. 6-month weekly. The trend is up. We already broke the high of last week. See this far right grid? Last week was the inside candle. It played out as expected, potential reversal, and that's what happened. We already popped above it. The trend is up. The longer term yields trending up. The middle chart daily, the middle chart daily, overnight inside candle right now, yesterday, forming that bearish engulfing candle. So that sounds like a contrarian. The longer time frame, the weekly, trending up. Daily chart, bearish engulfing. So I want to expect a retracement to the downside for opportunities to be buying on the dip. Key levels already labeled here. Again, we could go lower, dump before we have the pump of next week's policy. And the far left intraday. So we had a consolidation here the prior week. Friday, we had that big green strong candle. Very bullish, forming this key level right here I have labeled green, potential buying area for bulls. And we have a consolidation up here now. Yep, this is a key event that occurred right here on multiple things. The dollar and the stock market, because we had the stock market sell off huge that same time frame. Then balance down here. Continue on. Now we're looking at what the U.S. Treasury sells, auctions off, IOUs. So this is the short-term IOU, the 2-year notes. The U.S. Treasury auctions these off, sells them, processing of IOUs. So these go inverse from yields. Again, this is the short-term one. When they trend down, we're looking at the far right grid, weekly. When they trend down, the yields go up, interest rates go up. So again, not contrarian, inverse from each other. Yep, so these are trending down. This week, we made an all-time new low for the 2-year, which I shared that last week when we did too. And because we made a new low for the year, that's also had the dollar going up strong. The weekly chart, which is to the far right, I want to show you that big red candle last week. I'm expecting a retracement part of that body, and that's what's occurring right now. We're in a retracement mode here. See, currently green, back inside. Okay, the overall momentum is bearish. The trend is down. The middle chart daily, overnight, we're inside candle. We already started the reversal. Imbalance area, midpoint, potential trigger for a trade, bearish. And the intraday 4-hour on the far left. Some key levels I labeled for potential bearish entries. Now we're looking at the long-term U.S. Treasury notes, IOUs. This is a 10-year one again, the weekly chart, lower low, lower high. What's difference is between this longer term one and the short term one is I showed you. The short term one made a new low for the year, but they're both trending down. I'll also explain, I'll say again, I'll share again. The short term reflect more of the policy sentiment of the FOMC, the Federal Reserve Central Bank. So that means likelihood, because these are going down, they will either leave rates unchanged, this pending meeting next week, Wednesday, or they'll raise rates to fight inflation. The middle chart, daily. Yep, currently inside candle right now, just doing natural retracement. And the far left, the 4-hour. Key levels labeled. Let's update this more. So understand these financial instruments I'm showing you trade on the market of the US Treasury, not the stock market, not the Forex market, not the options market, not the futures market, bada bing, not the crypto, different exchanges. Now, derivatives trade over these on the other markets, which I'm showing you here. IOUs. The federal government does not collect enough money from tax revenue. That's a fact. The federal government does not collect enough money from tariffs. That's a fact. You have politicians, medias, and people that wash and repeat and say the same lie. If we had enough money being collected from tariffs, why are we still selling U.S. Treasuries IOUs? Because it's public information to show how much we're taking in. This is a democracy. Not a lot of democracies are the same. It's public record how much we take in from tariffs. Since we don't take in enough from tax revenue and tariffs, we write IOUs. We borrow money because the degenerates in the leadership of Congress and executive branch spend more money than we raise from tax revenue. Again, tariff is a tax. So we write these IOUs, promissory notes, and we have interest rates on those. Well, I'll show you the other insight, the short term and the long term. Treasuries, when people want to invest in our IOUs, they buy US dollars, putting more bullish bias on the US dollar. How do you entice people want to buy IOUs? You offer them higher interest rates. United States, it's a fact. United States is only paying the interest on the US debt. That's a degenerate society. Not even trying to pay it down because they keep raising the spending. No signs of paying down the debt, just paying the interest. Now let's go on to the next financial instrument. King dollar, the US dollar. Weekly chart on the far right broke above the high of last week. We already did a retest, a good portion of it. See, look, the far right chart. Big wick on the bottom. Test that. Big, strong green candle. Again, that was last week. That big movement was the same time I shared with you what the U.S. Treasury did. And I will show you briefly, a little bit. And the stock market had a huge sell-off. Again, the dollar went up super strong because the yields went up. The Treasury in the short-term and long-terms went down. For people buying dollars to buy those, the inverse effect on the stock market. The sentiment is the Federal Reserve again will likely leave rates unchanged or raise them. Again, it's a committee that votes. Not all members are expected to vote the same way. Last week, I gave a lot of insight about my bullish reasonings behind the US dollar. Trade opportunities were shared last week. So now, here's the high of the year of the US dollar. The daily chart in the middle. Overnight, inside candle still. Yesterday, I mentioned to my Patreon members, it was a nice bullish entry. So we had this big, strong green candle last Friday, really strong move up. Retracement, big wicks on the bottom, showing buyers stepping in here, and buyers came in strong, midpoint here. And now I'm looking for a potential reversal going higher. I am in bullish positions, the US dollar, making gains. Using a stock ETF. Left chart, intraday. Yesterday, we formed this nice, strong move up, big green candle, strong demand. All these shorts were trapped. So nice move up, having that retracement move coming in here. And look, we have wicks on the bottom, buyers stepping in. So opportunities to reload or if you haven't taken positions yet, to put on new ones. Also have a key level down here, which correlates more down here. So we'll see. The week's not over yet, just middle of the week. We can have a sell-off going lower, just like here in the weekly. The far right hasn't truly been tested. But I'm situation aware, price levels, and we have a game plan. Let's go on to the next. Biggest currency in the US dollar index is the euro, and it's trading inverse. Very close to the lows of the year. Same patterns. Look, midpoint tested, just shy. The middle chart, the daily, bearish pin bar, right up to that midpoint, nice. And currently inside candle right now, retesting that. And the far left, intraday, yep, huge reversal there yesterday, and a retracement. And now we're looking at the S&P 500 futures. Last week, that huge red candle, huge panic selling. This week, lower high, lower low, testing key levels. So this week, we already tested midpoint of that big red candle, massive rejection. Again, I'm not bullish. I'm trading on the bearish side. And look at that. We went down this imbalance area. Buyer stepping on the dip. That candle's not done to the close of Friday. The middle chart, daily, that huge panic selling yesterday. Big wick on the top. Right there, midpoint, opportunity have been putting in short positions or closing bullish and ran down and broke here. So again, a lot of money buying on the dips and smart money either taking profits up here or putting on shorts. Yep, right now we're already testing midpoint right here. And the far left, intraday, got huge panic selling yesterday. And now the trend is down. Go to commodities, crude oil, inflation. Wars add inflation. Certain wars impact worldwide a lot more geopolitically. So, of course, the Iran war, is bigger geopolitical due to the what? Oil, energy. The war between Hamas, part of Palestinian government, because Hamas is the elected government of Palestinians. That war is smaller. They're not producing nuclear airplanes, ships, fuel. So geopolitically, that's not anywhere near the scope of what Iran is. My point is here, it's impacting geopolitically the cost of energy, the assurance, the embedded costs. So again, that's leading to more inflation, making more inflation. Yep, the Federal Reserve's job is harder. Crude oil for the week, lower high, lower low, back inside a demand zone. Daily chart, inside candle. Wicks down here, buyer stepping in. So I'm looking to take bullish positions. Again, this whole year, my crude oil trades have all been winners, thank goodness. Swing trades. And the daily chart. I mean, the 4-hour chart on the far left. Yep. The momentum's still down. A lot of selling. But buyers on the dips. So retests coming in. Go on to the next commodity, natural gas. I'm still in bullish positions, have gains. Look at this, natural gas, big weekly candle, that green candle, and now in a retracement mode. Big wicks on the bottom, buyers stepping in. But again, the trend is still down. The middle chart, daily, demand zone, imbalance area, hasn't been tested yet. Did break this consolidation. Look, these are consolidations, staircase at a higher high. We broke it overnight here, and buyers stepping in. The far left intraday, key level down here I've labeled. Haven't tested it yet. And again, we have a gap there that just shy of getting filled. So we start making what? Consolidation, staircase out of lower lows. I'm looking to reload. Lower levels haven't occurred yet. Now the other category of commodities, metals. Commodities priced in US dollars. Stronger dollar often leads to lower prices in commodities, but also the supply and demand. Remember, metals, gold, silver, copper, all the metals have industrial use too, not just jewelry. So as the stock market declines, as inflation occurs, as the economy slows down, less demand for a lot of commodities. Weekly chart, new low. Lower high, lower low. Broke this key level. Middle chart, daily, again, broke that key level, coming to the lows of the year. Excuse me. And the intraday. Yep, since last night, more selling. It's interesting, that 4-hour candle, massive retest, rejection. Did not even do a deep retest in that imbalance area. On to the next, silver. Hi-ho silver. What TV show was that from? Hi-ho silver. Silver weekly chart, again, lower low, lower high. Daily chart. Broke the low of yesterday already. And the intraday. Doing some consolidation here on a retest. Go to crypto, Bitcoin. Last week made the new low for the year. Big selling off, panic. Currently inside candle for the week. Look how small that trading range is here. The middle chart, massive consolidation. Speculators buying on the bottom. Look, right now it's forming an H pattern. Might get a bounce and then it can take a lower low. But speculators are buying down here. If I was going to take that risk, I'd rather be buying tech stocks, AI. They're making new highs for the year. Why would I buy a loser down here that the momentum is down? Big demand for tech stocks, chips. Not a demand for crypto. And the intraday 4-hour. Yep, already broke the lows. Trend is down. Gonna put on one more stock index, the NASDAQ 100. Look at that on the weeklies, lower low, lower high. The daily chart here. Yesterday, we broke that swing low. Buyers stepped in there. Currently inside candle, do retest that bottom wick. And the far left. Now selling off. Thank you as always spending just a little time with me. That's it for the video. Thank you kindly for your support. Thank you for watching.